The local markets jumped after Wall Street closed at its highest level since 2008. I spoke earlier to Ken Howard from RBS Morgans. Well, Ken Howard, a 5-year high on New York's Dow Jones index, and it seems that some of that sentiment has washed through to regional markets, including our own.
Yes, it's very good to see those equity markets starting to move ahead again. I'd like to think that the European sovereign debt crisis has been put on the bank bench for a while, and people will start looking at some of the opportunities out there in equity markets. Certainly the US market's doing better than our own. Back at 2007 levels, we're still some 30% below, but the US market does have a very large component of technology stocks there, with things like Dell and Microsoft and Apple, of course, which consumers are obviously very keen on. So in time, we'll catch up too.
Our stocks, of course, are more the resources. And just on that, Woodside Petroleum, I see, is shut in 6 oil fields as Cyclone Lua hovers off Australia's northwest. Has that had much impact on the stock price, which I noticed is down 1%?
Yeah, certainly the Woodside share price was off today in what was a very positive market, so one of the underperformers. But look, I just put that down to normal market noise. Cyclones in the northern parts of Western Australia are fairly routine activity, and certainly all the big operators up there will have built operations to withstand cyclonic conditions and floods, as I'm sure the Queensland coal companies have. So once that cyclone danger passes, I'm sure those platforms will be back up and operational again.
Property group Stockland has extended its share buyback. What do you read into that?
Look, I think it's another sign of corporate health here in Australia. We've got some very strong balance sheets on those companies that are listed on the stock exchange, and Stockland's been generating significant amounts of cash flow. This latest round of buybacks been funded by some further asset sales at pretty close to book value, but their shares are trading at a 20% discount to NTA, and I think buybacks are a very tax-effective way of creating value for shareholders. They don't have to pay any income tax, and there's no capital gains tax events, and their shares are attractively priced relative to the valuation that's in the balance sheet.
On the other hand, the issuing side, Fortescue Metal is looking to raise $1 billion. Take us through that one.
Yeah, look, I think that's a positive sign on a couple of fronts. Certainly it's good to see Australian corporates raising that sort of money in global credit markets. There was a bit of a freeze there as Europe went through its jitters, but interest rates for corporates have been very competitive and very attractive, and I'm sure that's one of the things that's encouraging Fortescue to access those credit markets at this point in time. It's also a positive sign about the outlook for bulk commodities. I know the messages coming out of China are a little mixed at the moment with the slowdown and the winding back of property construction, but the long-term theme about demand for bulk commodities and steel and the subsequent infrastructure in places like China and India, I think is alive and well. So Fortescue obviously wanting to remain ahead of the curve, bringing on new production to meet that future demand.
All pretty positive today. Ken Howard, thank you very much for joining us.
Thank you, Tiggy.